Thawing China trade talks and the strong jobs report keeps markets rallying. Add 5 more green days for the market rally, with this week up another 3% more. Market optimism is running wild with expectations for a quick China tariff deal to negate the threat of empty shelves. So let's quickly recap. Coming off a 4-day rally, Monday squeaks out a gain recovering from an early morning hangover. Then, Tuesday adds on as tariff relief for US automakers was announced along with a more gradual ramp up for foreign auto. Wednesday was red early on negative economic data with private jobs whiffing and Q1 GDP surprisingly negative. However, investors rallied to squeak out another gain by the end of the day. Then, aftermarket, hyperscaler earnings gave AI infrastructure names a shot in the arm. Despite recession fears, a consumer slowdown, and tariff turbulence, Meta is increasing their AI spending plans. Markets rallied again on Thursday with AI and tech leading the way. And finally, Friday ends solidly green. First, despite shaky labor data earlier in the week, the April jobs report was much stronger than expected. Non-farm payroll still declined, but much less than expected. The data calmed some recession fears, with the job market still holding on despite all the tariff drama. And then on the tariffs front, investor optimism for a quick China trade deal got a boost. China is now considering holding talks with the US after apparently repeated attempts by the US to engage. Friday caps the week up 1.5%. It's been a historic 9-day rally with markets fully recovered from the Liberation Day market correction. So now what? Well, Friday was definitely a boost for economic optimism. The US and China tariff feud appears to be thawing and likely leads to negotiations. However, markets have already rallied over 10%. Meanwhile, US-China trade has already been halted for the past couple of weeks, and this game of chicken between the nations is just taking too long. It took 2 weeks to move from the US hinting it was open to talking to China just considering to talk. In addition, for other nations, we see deals being made for near-term stability, but long-term plans are likely to shift economic independence away from an unreliable, fickle US. Next week, the focus will be on the Fed meeting. We don't expect rate cuts this meeting, but markets are looking for summer cuts still, and we'll be looking for some signal that they might be coming. However, the jobs report just gave the Fed some breathing room on jobs, and now can likely wait longer to see any tariff impact on inflation. We could also see the White House restart its feud with Powell if the Fed holds rates steady. We'll follow up on this and more next week.